Today is Monday, the 8th of September 2025, and so I will be going over a trade that I took just a few hours ago during the London session. I took a long position on GC, so let's go through that. So the first thing, as always, I always look at the daily time frame first, try and figure out the overall direction price is currently moving. So we have an extreme high and an extreme low on the daily time frame, and we've basically been range bound for a few months now, since May, and it's September now, so a few months. But recently, a few days ago, gold finally decided to go for that extreme high, also creating a new all-time high. Now this move towards all-time highs was very, very aggressive. It was a move with a total of 1, 2, 3, 4, 5, 6 consecutive candles expanding higher. So a very clear, strong push to the upside, taking out that extreme high, also creating a new all-time high. Now, at that point, on the 3rd of September, I wouldn't really look to trade gold, right? I was either expecting a reversal or simply a retracement, right? That's all price does. It either consolidates, retraces, or reverses. So I was simply waiting for more price action to play out on the daily to confirm whether or not we are reversing or we're simply retracing for another move higher. And so on Thursday, the 4th of September, we have our first bearish candle, and we retraced into this very clear and large fair value gap on the daily time frame. And what do we have here? We have a C2 candle closure, meaning that this candle sweeps out this low, tapping into the fair value gap, and then closing back into the range of the previous candle. So that to me signals that we are not reversing, but we are instead just going through a shallow retracement. So after seeing that, my bias on the daily time frame was bullish. Now, I did not trade Friday. There probably was some longs to be taken, but I did not personally trade Friday. Now, I was not bearish just because we swept that high, right? Because the overall structure is clearly bullish. We have an expansion, a retracement, and then a possibly another expansion, right? And so what I did on the daily time frame is that I simply marked out the 50% of this candle, of the C3 candle. So on Monday open, I simply expected the daily candle to expand further as long as we were respecting the 50% of our previous C3 candle. And as you can see, we did in fact respect that level. So that's pretty much everything that I looked at on the daily time frame, and I then dropped down to the hourly time frame to look at the market structure. So on the hourly chart, you see we tapped into that fair value gap on the daily chart, and we then had a change in the state of delivery on Friday. Now, because this move is so large, looking at these levels can also be used, at least in my opinion, to look for a confirmation on whether or not we are going to trade higher, right? And we are, like, it's a clear move. We're making higher highs and lower lows, but ultimately this is our much more clear change in the state of delivery, right? So this is the open of the candle that I look to trade, aka the candle 4. And so when I'm trying to trade an expansion, expecting the daily candle to move higher or lower, I always look at it and frame it as either an open low high close or an open high low close. And so when I'm looking for longs, I always try and trade a open low and then high close. And so what do we have here? We have an open, and then we move lower, and then we move higher, right? So you want to position yourself somewhere around here, right? After a potential low of day has been created, right? It is a very clean open low high close. On the hourly time frame, I always mark out my draw on liquidity, are usually swing points. I don't really target fair value gaps. I always try and target swing points. So I always mark out the extremes of the range, being this high right here, also being the all-time high. And then I also try and mark out session liquidity. So turning on our session indicator, we have Asia highs. So my targets for London session was Asia highs, and it was the extreme of the range. So on the hourly time frame, I mark out FVGs and swing points. So what do we have? We have a retracement into this bullish fair value gap, and we sweep this low. But around this time, it is irrelevant for us anyway, because this is outside of any major trading session, and so you wouldn't like to trade this anyway, right? And that is to be expected as we just ranged, right? But then we have another sweep. We have a sweep of this low. This is the Asian low, but I wasn't really looking at that level. I was more so looking at the extreme. I always try and trade based off the extreme of the ranges. It's, to me, I find it always much higher probability than trying to catch like a reversal off of like a swing low that is really close to another swing low just below it. So we did have a sweep of that low. Now we did not have a C2 candle closure, but we did have a C3 candle closure. But it would be more optimal, of course, if this candle closed above this open. But nonetheless, I then marked out 50% of the C3 candle, and as long as that level is respected, I will be looking to get on side with a move higher on the entry function time frame, which will always be the 5-minute time frame. So I'm trying to keep it really simple: the daily time frame for the bias, the 1 hour for the structure, and then look to get on side by looking for an entry function on the 5-minute. Now here we are on the 5-minute time frame, and immediately I noticed this. All of these failure swings creating a bunch of smooth edges, also known as relative equal highs. And to me, this is one of the most important elements when I look to trade. If relative equal highs or lows are not present, I simply do not trade. Now what we also have is accumulation followed by a manipulation lower, and then we look to trade the expansion higher, right? So there's a lot of confluence behind this trade. We have a change in the state of delivery within the candle 3. The zone right here represents the 50% of that candle 3. I'm simply trying to trade the continuation. I'm not really trying to catch the reversal, although that would work, right? It would work perfectly, right? And you would have gotten like around 3R for Asia highs. But I always like to trade the continuation, because then we already kind of have a trend already formed. I waited for the candle 3 to close, and then I looked to trade the open low high close of the candle 4, being this candle right here. On the open of the candle 4, we have a move lower into this fair value gap, followed by a closure through the opposing bearish candles, in this case being only one bearish candle. Now, I did not take a position here. I tried to avoid order blocks with shallow bodies and large wicks, because during my back testing I have found that larger bodies like this body right here is much more higher probability of supporting price higher. But let's say this candle was much larger, or if we had like 2 consecutive bearish candles with large bodies into, like, let's say this fair value gap, for example, followed by a close over, I would definitely take it. But I try and avoid shallow bodies. So I waited for another order block to form, and we do have that here, trading into that previous order block, followed by a clear move higher, closing above those opposing candles. I entered right here, and this is also in the first half of the C4 candle. I don't like to position myself, let's say 5 minutes before the hourly candle closes. I always try and position myself in the first half. So I entered right here. I placed my limit orders at the start of that order block. I placed my stop at that swing low right here, and I simply targeted 2R. Now, in a situation like this where we have a potential reversal zone being the Asia high at less than 2R, it's only 1R. And so I have a rule for this. If a potential reversal zone, being like the low-hanging fruit, is at a minimum of 1R, I take the trade and I simply go break even once that target is reached. So I enter off of here with my stop here, targeted 2R. When price swept Asia highs, I placed my stops to break even, and I did not take any profits, and I simply waited for 2R. Price never went back to my entry. Now, that could happen, but that is simply how I managed that trade. Although I could have held the position much longer for our final drawn liquidity for almost 6R, but that is simply not how I trade. I try and go for around 2 to 2.5R, not really trying to aim for the moon, just trying to get consistent small gains at 3641.9 being 2R, and then I close my final contract at 3643.8 at 2.5R, so that leaves me with around 2.2R. And I really just wanted to go over that trade because in my eyes, this is what creates high probability setup. There are a lot of confluences and a lot of like meaning behind the trade. There is a reason for price to move higher, right? Everything from the daily time frame to the 1 hour structure to the 5-minute entry function. There are a lot of things that add up together. And yeah, that's pretty much it.